Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back.
John, why is John Paulson requisitioning a special meeting to change the board of Midas Gold?
Jim, a lot of people are scratching their heads about that. On November 20th, Midas Gold management was blindsided by this letter from Paulson and Company asking for a special shareholder meeting to replace 5 independent directors with 5 new directors proposed by Paulson, and limit the board to 8 directors. Now, John Paulson, people, not everybody may know, he became famous when his hedge fund shorted the real estate bubble, which when it collapsed in 2008, his fund made billions of dollars, and he was featured in the Big Short book by Michael Lewis and the movie that was made about that. And that was, brilliant, figuring out that how can I short this real estate bubble manufactured by Wall Street with its securitized mortgage instruments, and he managed to figure it out. But then, after that, he decided to become a gold bug. The solution to the collapse of all these financial instruments was to do quantitative easing. In other words, buy them all up and gradually make the financial system whole again. And he figured, this was going to cause an awful lot of inflation. So he joined the gold bug camp and used his fund to load up on a whole bunch of gold stocks. Now, if you're a sophisticated gold bug treating gold as a hedge against inflation, then you buy producing gold companies that are profitable, because the margin stays the same if all gold is doing is reflecting inflation, and the costs will go up by the same percent and the price of gold will go up by the same percent. If that's what you are owning gold for, that makes a lot of sense. But what he did was load up on a whole bunch of companies like Nova Gold, whose gold projects did not make economic sense at the prevailing gold prices. For those to become in the money, gold has to go up a lot more than inflation. But during those 2 years, from 2009 until August 2011, gold managed to get up to $1,900, and that was a serious real price gain, because if you take $400 gold in 1980 and inflation adjusted to the present, it's just about $1,300. But after the Tea Party got control of the House in 2010 and basically said to Obama, no fiscal stimulus, we're only going to let this quantitative easing, which you don't control anyways, and we are going to be fiscal conservatives. We're going to have austerity policies. We're not going to let you do infrastructure spending to really boost the economy and thus cause inflation. And sure enough, inflation remained very subdued, below 2%, and in 2013, gold, which had already retreated to $1,600, tanked back to $1,300 and even got as low as $1,050, and that cemented in the worst bear market that we ever had for the resource juniors in its entire history. It technically started in 2011 and really didn't turn around until this year. But the kind of stocks that Paulson had loaded up on, these were all back to being worth not very much. And what used to be a hedge fund has consistently lost its unit members as they piled up losses, and it is now almost more of a family office managing his own personal money. Now, in 2016, he did something which I thought was a very shrewd and forward-looking move. Midas Gold had been, high flyer based on the Stibnite project in Idaho, but when gold crashed, it was in the dumpster. Rick Rule, who had been a backer of Midas Gold, said, okay, let's pull the plug on this. A permitting cycle is a 5-year horrible process in Idaho. We have no idea when gold is going to go up, but clearly the inflation's not here to push up gold. pull the plug on everything, go into hibernation, and just treat it as this optionality play. But other shareholders, led by Stephen Quinn, who was the CEO, said, no, we should start the permitting cycle now. And it's going to cost a lot of money. And yes, the 2014 PFS said that really the NPV needed to justify spending $1 billion to build this mine requires a $1,500, $1,600 gold price, which we do not have yet. That will eventually come. This would be a major gold mine producing 350,000 ounces a year, plus an antimony byproduct credit, which is a critical metal that is not currently produced in the United States. So Paulson said, I will put up a lot of money for this, and he put in, was around the $35 million U.S. Financing. At the time, it was a 35 cents convertible bond that didn't really pay any interest. For some reason, it was structured like that so that he would not end up having a significant stake in the company. And eventually, he coughed up $66 million in the past 4 or 5 years, and the company will have spent $75 million by the time that the whole permitting cycle is complete, compared to $120 million on actual feasibility demonstration work, such as drilling holes and metallurgical studies. Well, this year he finally converted this convertible debenture into shares, so he now owns 204 million shares out of the 540 million fully diluted, and that's about 44%. And this year, the company finally reached a major milestone. In mid-August, the Forest Service accepted a draft environmental impact statement, which kicked off what was supposed to be a 45-day comment period. This ended up being extended twice by 15 days for a total of 75 days, but it ended on October 28th. And now the Forest Service is reviewing all the comments and preparing a final environmental impact statement expected in Q2 of next year. The company itself, one of the big things missing has been an updated economic study. Since Trump became president, capital costs have gone up because of tariffs on various imported metals. And when it was $1 billion in 2014, it's unclear how much it is today. Stephen Quinn, in a conference call, did guide that they're not looking at a capex blowout where the capex doubles to, say, $2 billion. But the market really wants to see the feasibility study, which incorporates these cost changes, and also what additional operating costs were created by all the various mitigation requirements that the whole permitting cycle unearthed and said, you need to do this, you need to do that. And Stephen Quinn says that this feasibility study is still planned to be released before the end of the year. So all of a sudden, with a possible record of decision in the third quarter of next year and possible even a construction decision in the final quarter of next year, John Paulson decides to replace the majority of the board with his hand-picked people, some of whom are associated with NovaGold, a company, or were associated with NovaGold, a company in which he is invested, and saying we need these people to better represent that this is a U.S. company with its primary operation based in Idaho. And said that's fine, but then he made additional statements in his letter to shareholders, and one was he wants the management team to be based foremost priority in Idaho, which means that the current group that's in Vancouver, headed by Stephen Quinn, is supposed to pack up and move to Boise, Idaho, to be part of this redomiciling of Midas Gold as a U.S. company. And in the long term, that makes sense. But why would you do this now with about a year left in the permitting cycle, with light finally at the end of the tunnel, Why would you do this now? It's as if he wanted to fire Stephen Quinn, but didn't have the kahunas to do so directly, because in this pandemic time, why would Stephen Quinn pack up and move for another year of work, stick handling this project through the rest of the permitting cycle? And furthermore, the additional thing that he said that was absolutely perplexing is that he wanted the company to become more like a critical metals company. And that's insane. The rage right now is critical metals. Yes, America has neglected to develop rare earth deposits. The reason why? Well, because it's a lot cheaper to mine this stuff in places like China where the grades are better. But with the growing hostility between China and the United States, everybody's thinking, we better have more diverse sources of some of these critical metals. But the critical metal that the stibnite project would produce is antimony. And from the revenues of the lifetime revenues, it would only be 3% of the revenue. 97% of the revenue is going to come from gold production at the current gold price. So why do you want to call this a critical metals company? It's a gold producer company. So it's as if he's become mesmerized by all the hype about critical metals and has lost confidence in the future of the company as a gold producer. And antimony isn't even a sexy critical metal. 35% of it goes into a flame retardant, which is very important use. That's not going to change. It's going to grow along with the global economy, the demand for it. And then, as well as many of the other uses. But one of the uses, about 29%, goes to lead acid batteries, which are primarily used by fossil fuel cars. And the sexy critical metals are all those going into new clean energy technologies such as electric vehicles. If this trend towards electrification of the car sector continues over the next 20 years, you're going to see demand for the antimony for these lead acid batteries disappear, and you're going to see all these batteries being recycled from all these junked cars that people abandon because they're now buying electric vehicles, come into the market and flood it with surplus antimony supply. So antimony, while a critical metal in the near to medium term, is definitely not a sexy technology metal. So why is he sending this letter disturbing markets, implying that Stephen Quinn, you either move to Idaho or quit? Why is he saying we should become a critical minerals company? It really makes no sense, and I find it quite disturbing. I've run the numbers based on assumption that CapEx only going to blow up to $1.3 billion, and at the current $1,800 gold price, I come up with a $1.6 to $2.6 billion after-tax net present value at 10 and 5% discount rates, and that converts into Canadian $4 to $6 price range. And the stock's right now $1.15, and Paulson's doing all these disruptive things that are sort of detracting from the whole goal of getting this thing to the finish line. And then you present it to the big guys like Barrick. Is Barrick going to want to buy this out, and maybe instead of building an autoclave on the site, they truck the ore to the roasters in Nevada? Or is somebody else going to take them out and do the standalone that the feasibility study will have basically defined? Or will even the gold market be so strong that Midas Gold will be able to fund the capex on its own and turn stibnite into the foundation of a major new gold producer? These are goals that one would imagine that John Paulson would be completely supportive of, but what he has done here seems to undermine that gold and create a lot of uncertainty about what's really happening here. And it creates suspicion that maybe the plan is to take Midas Gold and fold it into one of these other companies that are less poised for upside and less advanced with the permitting cycle. And I'm not going to mention names, but I can think of some obvious overpriced companies that are not yet, these gold projects are not yet in the money. But I would prefer to see Midas stay as a standalone deal, be either auctioned off or end up raising the money to go develop stibnite on its own once they have the permit the end of next year or early 2022. And if we see something like gold go to $2,300, which Goldman Sachs is still predicting for early next year, those price targets that I talked about, they jump to $6 to $9 Canadian for Midas Gold, and it has enough money in the Treasury right now to finish this permitting cycle. So requisitioning this meeting right now, it's very strange. It really makes one worried about having this 44% shareholder suddenly dominating the company.
We'll have more with John Kaiser right after the break.
Yorbeau Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Yorbeau's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at yorbeauresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, New Legacy Gold published an update on its Rift anticline play in Nevada. Do we have a discovery?
Jim, we do not yet have a discovery, but we are an important step closer to getting a discovery. About a month ago, I talked about New Legacy and went into great detail explaining the geological model that has been developed for the Rift anticline play. It's based on structural similarity to what the Gold Rush deposit is all about, on which Barrick is now doing a feasibility study. That's about 10, 11 kilometers to the northwest. And this whole model was based on information gathered by drilling to the east of an area that's completely covered by barren basalts that obscure everything. And the only data that the geologists, the Barrick team had, was CSAMT data, a type of geophysical data. They also had it for the for the geology to the east, where the Serena and iceberg mineralization exists. That either doesn't hang together enough to be a big deposit at Serena, and it's too low grade at the iceberg to be interesting. But the geology was there. The Wenban 5 formation, which is the key host in the Gold Rush system, it was also present. It was not very thick, so the sponge didn't have the volume to soak up an awful lot of gold. But the team developed this idea that the fluid flow was from west to east along low-angle faults, and right here in the middle of this basalt pile, there was an anticline almost on trend with the Gold Rush anticline, where it's been folded over, and ideal type of trap exists for gold mineralization. And they finally got their permit in October and started drilling. At the end of October, they have completed 2 holes, both to about 600-meter depth, and both of them have intersected substantial intervals of the Wenban 5 formation. And this was like where, 10, 25-meter Wenban 5 in the Serena. Here they were getting, in the first hole, 178 meters of Wenban 5, and in the second hole, it's about 300 meters away, they got 340 meters of Wenban 5, and both of them started at depths, 169 meters of the Wenban 5, and both of them started at depths of about 300 meters. So this is not going to be an open pitable situation, which Barrick found out as kind of a no-fly in that particular area of Nevada. Anyways, they did not say very much about what the Wenban 5 core looked like. Wenban 5 simply means it's one of the stratigraphies in the area that's distinctive from the Wenban 8 and all the other ones in that area. They did say that it was anomalously altered. That's not the same as intensely altered, which means that a lot of fluid flowed through the rocks. But this is a blind, undercover area, so like 3 kilometers, 4 kilometers by 6 kilometers, completely covered by barren, younger rocks. And these are the first 2 holes. And the major milestone is that the modeling that they did with the CSAMT data, correlating it with the known geology to the east, it is reliable. So we do have a thick package of the prospective rocks. They appear to have been altered. Now the key is to find where the high-angle faults brought the fluids, channeled them upwards, diverted them into the Wenban 5 rocks where they could bleed into them and create the high-grade 10 gram per ton plus gold grades that make Gold Rush a 10 million ounce future underground mine. And they've got 2 more holes underway to the south they will be taken a little bit deeper. Those are about 600 meters to the south. We do not know yet what those will look like. My own feeling is that these first 2, if they had looked really juicy with realgar, the arsenic cyanide, sulfide in it, we would have heard about it because the gold grade often correlates with the visible evidence of the key Carlin pathfinders. Those ones will hopefully give us some anomalous gold. They are the first of what will become a series of holes to vector in on where did the gold pile up. Where are the traps, the sponges, which build these big zones of mineralization? We could still get lucky with those other 2 holes, which will be drilled before the end of the year. They will not go back onto the property until late March or early April, so we will have some dead time in between. Assays won't start arriving until probably early January, based on the sort of 6-week turnaround time, and with Christmas in the middle of this, and with the pandemic crisis still getting worse as the flu season advances, we may not know until the end of January to what extent there is mineralization. But important step, the structural model is correct. The data translation that they've done is working, and this will be a very exciting 2021 coming up for the Rift Anticline play of New Legacy, and hopefully we get that ore grade intersection that tells us, yes, they've got the beginning of what could be a huge discovery.
We'll have more with John Kaiser right after this.
Value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're chatting with John Kaiser. John, did Yorbeau Resources have any luck with its deep hole at Lemoyne?
Well, Jim, I introduced Yorbeau a month ago, a week after they started drilling this deep hole on the Lemoyne project. And this project once hosted a 760,000 ton VMS deposit that was quite high grade, had a very high gold content, the second best after SK Creek, but it was relatively small. It was mined out, and it's in the Chibougamau area of Quebec, to the south of Chibougamau. And Yorbeau acquired this project when it absorbed the assets of Cogitor, which had looked for additional Lemoyne-style VMS deposits along strike, but did not have any luck. But there was an EM conductor that showed up in one of the downhole probes in an area between 800 and 1200 meter depth, where the past drilling efforts to find another Lemoyne lens simply had not penetrated. So here was an untested conductor. And so this hole was started, and of course it as a long 1200 meter hole. It took longer than expected because they had to control deviation. They hit the target 1200 meters this weekend, and then it went into gabbro. Now there's this gabbro dike that has intruded the stratigraphy, and it is post-mineralization, and it showed up just after they got into the hanging wall sediments that sit above the Lemoyne event horizon, where the smokers formed this type of VMS deposit. And so they realized they missed. It's not there. But when they did the downhole geophysical probe, they saw that it was still there. The drill had deviated somewhat to the west of their target, and the interpretation of the geophysical survey, that the downhole survey, was that they may have missed it by only 5 meters, which is possible because when this gabbroic dike invades the area, it will just come through and displace anything that's in the way. Now, fortunately, this hole was designed as a pilot hole for future wedging, and they've done a very good job in setting up this hole in case there is a discovery. In this case, they don't yet have the discovery, but they have now backed up to the 800 meter level and have started a daughter hole, or a wedge hole as they call it, which will move farther to the east and go into the bullseye of the geophysical anomaly. And they are now pretty confident that massive sulfides are present, and that with proper control of this wedge hole, they will hit this target within about a week or so. Now the question is it simply massive pyrite, the iron sulfide, or pyrrhotite? In which case it's a bust, and it explains the EM conductor. And the crew, when they see the black water start coming up the borehole, they will know that they are into massive sulfides. And we could see this stock start to tickle up in the next week or so if they see that, but I would prefer to wait until they've pulled the core, looked at it, and confirmed that with visuals that there's also chalcopyrite and sphalerite, the copper and zinc sulfides present. You won't be able to see if any of the gold is present. You're going to have to wait the 6 to 8 weeks that this takes in Quebec these days. But if you get the visuals on that, and they put out a press release saying that, there was a good chance that this new discovery in the vicinity of the Lemoyne could be something of similar or bigger size, and that would take this stock, which is sitting there at 4 or 5 cents, while a shareholder who had been ousted from management appears to have been selling down his position gradually to move on. The stock has no anticipation premium built into it. It's sitting there at 4 or 5 cents, which makes it an interesting play. It's for my subscribers. I've tagged it as a favorite because if they miss on this target, there might be a brief downside of a penny or so, but the company is rich with all these other assets and will eventually be taken out by IAMGOLD or some other group. And so you treat it as a type of an asset play that might double in the next year, or will likely double in the next year, but could come alive in a very big way. And it would be a big trader because there's 340 million shares issued. So it's a very liquid stock. This could become a very fund discovery. And there is another company which owns land to the south, the Lemoyne stratigraphy. It's part of a syncline. It dips to the southeast and then disappears under other rocks. But apparently the syncline, a southern limb, comes up on the other side, and this other little company is a major landholder in this area. At the moment, they're primarily drilling gold targets in the southwestern part of the property, but they've also outlined VMS-type targets that could be, related to the same smoker horizon that created the Lemoyne deposit. If we do get a discovery in Yorbeau, there will be a lot of fresh interest in this company, which by its own right may end up becoming a future Discovery Watch candidate for what it is chasing in this area south of Chibougamau.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Discovery Watch is a production of How Street Media Incorporated.